Hello, and welcome to the fourth module of our Wealth Building 101 course. We've covered a lot of ground in this course so far. We've talked about the two most important and fundamental tools of any wealth builder, the balance sheet and the cash flow statement. The balance sheet keeps track of our assets and liabilities and tells us the score of our personal financial game, our net worth. As you grow your assets and shrink your liabilities, you increase your net worth and build wealth. The cash flow statement tracks the flow of the money in your life on a daily or weekly basis. What comes in, what goes out, and when you understand how the money is flowing in your life, you can make conscious decisions and take deliberate actions to use your income to grow your assets and shrink your liabilities. This session is where the rubber meets the road and is really about how to put everything together. How do you use these tools and these principles to improve your financial life? Today we're going to cover what I call the 3 steps to wealth. These are the 3 fundamental things that you must do to put these tools to work and to build your wealth for the short and long term. So let's dive right in. What are those 3 steps? Step 1, you must establish consistent, positive cash flow. What does that mean? Going back to our cash flow statement, it means that when you subtract all the expenses from your income, you still have something left over. The more you have left over, the better, because that takes us to step number 2, growing your net worth. You do this by using as much of your income as you can to buy assets and reduce or eliminate liabilities. And step number 3, you must protect and perpetuate your wealth as you grow it. First, you want to insulate your wealth from unexpected expenses, a job loss, a flood, or whatever other risks there may be to your wealth. It's also about perpetuating your wealth. That means growing and sharing it in ways that improve the lives of others, whether that's your family, your community, your church, or charitable causes that matter to you. Let's explore each of these steps in a little more detail. Let's go back to our cash flow statement. If you filled out your own personal cash flow statement from the last session, you know whether your cash flow is positive or negative. You know whether more is coming in than is going out. Whether your cash flow today is negative, positive, or dead even, the first step to building your wealth or accelerating it is to grow that positive cash flow. And you can do it in 2 ways. You can increase your income and you can decrease your expenses. Let's talk about your income. There are 2 basic kinds of income. Sure, it's all money, but it's earned in different ways, and it's even taxed in different ways, based on how you earned it. The first kind of income is earned income, and the second kind is passive income. Earned income is money that you work for, right? You show up at a job every day, you punch in, you do your shift, you punch out, and go home. 2 weeks later, you get a paycheck for your work. Or you do a freelance job for somebody, and they pay you for the work you did. If you don't show up for work, if you don't show up for that client, you don't get paid. This is the most common kind of income. This kind of income is called ordinary income, and believe it or not, it is taxed at some of the highest rates, meaning you will pay more taxes on this kind of income than other kinds of income. The other kind of income is passive income, and this is income you earn whether you're there or not. The income kind of generates itself. Now, this income might be taxed as ordinary income at those higher rates, or as other kinds of income at lower rates based on where it came from. But the point I want to make here is that you can have assets, investments, licensing arrangements, royalties, and different kinds of income that come in whether you're there or not. You do the work once, like write a book or record an album, and it continually generates income for you. Or you get a successful business going, or invest in a franchise and it brings money in. Or you own a rental property and you collect rent from tenants. Or you own dividend-paying stocks in your portfolio and you get some fraction of income from that investment on a recurring basis. You don't have to necessarily show up for work to get this income. So when we talk about increasing your income, you can increase your earned income and you can increase your passive income. What are some of the ways you can increase your earned income? Well, you can increase your professional value to the marketplace by developing your skills, earning certifications, taking on additional responsibilities that you get extra pay for, and so on. You can increase your value to your employer and negotiate for a raise or a promotion. You can do freelance work or start a business. To increase your passive income, you have to look at those investments and assets and see how to improve their performance. You could create something of value that you only have to do once and sell it. You could rent property or space you have to someone who needs it. I know someone who has a 2-car garage and she rents half of it out to a local handyman for storage. It could be as simple as that. You could work with a financial planner to maximize your investment returns, or more likely, quit trying to time the market and peg your investments to an index, which typically outperforms the best money managers out there and doesn't cost you management fees. Let's switch now to look at your expenses. Now, I realize that it can be tough to cut expenses. Some of us are making just enough to get by, and there's very little fat to cut in the budget, so to speak. But sometimes there are a lot of wants that have become needs, or expenses that have crept in that are just not providing all that much value. And there are a lot of creative ways to cut expenses. Simple strategies you can apply that don't cut your standard of living, but stretch each dollar further. Probably the most powerful strategy is to stop debting, to stop using the credit card to pay for things. Because unless you are disciplined about paying it off every month, you could be increasing the cost of everything by 10 to 20% in interest payments, and it really adds up fast, and especially the longer you take to pay it off. Rather than borrowing from the bank, borrow from yourself. Build up a cushion of cash that you can use for those emergencies or those tight months and pay yourself back. That will save you a ton of money and will protect your financial freedom. A lot of us have money leaks in our budget. A lot of us are paying for subscriptions to online services or gym memberships and other things that we don't actually use or get that much value from. Or you may be paying fees or costs to your cable company, your utility company, or some other vendor that you really shouldn't be paying. It's just money leaking away every month. And maybe it's not a lot, but they add up, and they add up even more over time. So go through every expense in your cash flow statement and see what money leaks you can plug. What are you paying for that you don't need or use anymore? What extra fees or costs are you paying that can be renegotiated or canceled or sometimes corrected? The banks and the credit card companies and cable companies, they're all competing for your business. Make them earn your business. Make them compete. Ask them what incentive they can offer you to stay with them since you've been a solid customer all this time, or because of the deals they are offering to newer customers. Remind them that their competitors are offering you deals like that right now. Call your credit card company and ask for a lower interest rate, given your established relationship with them. Avoid paying retail whenever you can. Now, I'm not saying you need to waste a lot of time cutting coupons for the grocery store, but if you are strategic about when you buy, you can save hundreds of dollars. Keep your eye on clothes and furniture and other items you like and wait for them to go on sale to buy them. Take advantage of incentives that get offered periodically. Just make sure they really benefit you and aren't just tricks to get you to buy today or are those fake discounts. Save up your money, and when you buy the best quality you can afford and take care of it. It will last you a long time, you will love it, and it will save you a ton of money by giving you long-lasting value and reliability. This way you won't spend more having to buy a cheaper model over and over again that keeps breaking or wearing out. Look at your home and auto costs. What are you overpaying for? Maybe you could save money by switching to a different insurance company or a cable company. What are you buying or paying for that you don't really need or use? Are you taking advantage of all the tax breaks you could be getting? Now, when I was a young adult, I couldn't understand the logic of paying an accountant to do my taxes. It just seemed like a waste of money. And the first time I did take my taxes to an accountant, he found a couple $1,000s in deductions I didn't even know about. And then I was like, okay, now I understand why you pay an accountant to do your taxes. Even after I paid him, I had a lot of extra money in my tax refund that year. I never did my own taxes ever again, and that was 20 years ago. If you own rental property, make sure you're getting all the deductions you can. If you're a chaperone for a trip, your kid's class goes on, and you drive the students in your own car or drive somewhere for charitable work, you can deduct that mileage and it may lower your tax bill. There's all kinds of things you can do. Get help from a professional accountant or tax advisor and don't pay any more taxes than you have to. And like we said, get really clear on what expenses are really important to you and which ones you can let go of. Over time, our budgets get bloated with expenses for things we don't even really want or use anymore. So go through your expenses and quit paying for anything that you don't love and doesn't give you tremendous value. You work hard for your money, and the money you bring in is the fuel for all your wealth, so don't give it away easily. Make every expense really earn its place on your cash flow statement. So take a moment and go through your own cash flow statement. Make sure you're positive, make sure you keep more money than you spend, and then look at ways that you can grow that, either by increasing your income, reducing your expenses, or both.